Good morning, traders. Welcome to another episode of Traders Talk. This is Tony D at the Sydney Dealing Desk at Easymarkets. If we're looking at today, you've seen some major moves overnight. Just briefly, what's happened is that Donald Trump Jr.'s son has been embroiled in some emails regarding contacts with some Russian lawyers during the election campaign in 2016. Much ado about nothing in regards to Trump himself, but the Democrats are pushing hard on this, saying where there's smoke, there's going to be a lot of fire. This could lead to a derailing of the Trump agenda. That's why you're seeing the US dollar sold aggressively. Technically as well, the US yen, which is a major pair and a big part of the US dollar story, has reversed from fresh highs. So it took out May highs, April highs, and it's just reversed here. So that's really bearish price action technically. In terms of how far it can fall, it depends how long this story lasts in the cycle, in the news cycle. He survived a lot worse, so potentially this is not going to be the thing which buries him, but derailing his agenda and when he can't even get the Obamacare passed is another reason why the market's getting a bit more skittish. Alright, so the repeal of Obamacare also looks like it's not on the cards. So this is not even close to being able to get past his tax plan, so the market is a little concerned about all these distractions. Who's taking advantage of this? The euro is making another move at the 2015-2016 highs. These levels are where the market can reverse from. If it breaks higher though, this is going to be significant, and it will have an impact on all the pairs around the market, because a strong euro is actually important for a strong Aussie dollar, a strong Canadian dollar, a strong pound. And so keep that in the back of your mind here. It's worth keeping an eye on the euro just because it is such a big player in the market, and like the tide, if it's going high, it's probably going to raise all the boats there. In regards to the Bank of Canada, Bank of Canada has been a topic of discussion with a lot of clients this week. Is the market fairly priced? I do believe so, in terms of how far we've come. Around about 600 points in the last 3 weeks since that hawkish shift came out from one of the Bank of Canada speakers. Now, in terms of where oil is also lower and gold's also lower, so the exports for Canada is a little bit lower, and the market's already priced in that they're going to raise 2 more times this year. So the potential for short squeeze is very real if they either don't raise rates this month, or they a dovish rate hike, which is very possible. So tempering market expectations, a move back above 130 would definitely take some of the trading stops there from traders who have been selling for the last 3 months. In regards to other reasons to be wary here, the longs from the previous rally in the dollar CAD have mostly been stopped out, so this is fairly even in positioning. So the short-term traders are short, the longer-term traders have already been stopped out. So the potential for the market to go higher here is quite real. A good trade in a sense is looking for any sort of short squeeze to fail, fade away, and then resume the uptrend, resume the downtrend here, trying to get into a short dollar CAD position as close to, say, 131 as possible. It's unlikely that we get that high, but if we do, then it becomes a definite trade idea. Best of luck with your trades, guys. If you want to contact us, please have a look below the YouTube there. You can see our details and see how you can come get a little bit more assistance with your trading. I try to get you on the right side of the market. Best of luck.